Hello learners, welcome to live program in accountancy at the secondary level, and the topic for the day is financial statements. So before I begin with the financial statements, you know that in the previous lectures we have already studied about the initials of accountancy, that is preparation of journal, preparation of ledger, trial balance, and let us learn further now. So first of all we need to know that what we would be doing today. आज हम क्या क्या करेंगे. So you can see here. So after going through this class, you will be able to explain the meaning and objective of financial statements. You will be able to classify financial statements into trading account and profit and loss account and balance sheet. Then you would also be able to prepare the profit and loss account and balance sheet. Then you will be able to record the adjustments relating to closing stock, outstanding expenses and prepaid expenses and depreciation. So let's move further now. So as I said that before we begin with the financial statements, actually let us recapitulate what we have done before that, or what you need to know before you begin with the financial statements. So you see a businessman here. He's an accountant also, and he is making the accounts for the firm. So these are some of the source documents, because before you start preparing a journal, you should know that on which basis the journal is prepared. So journal is prepared, the entries which we do in a journal, the transactions that we record, because you all know that in the journal when we are doing accounting, we record transactions that are of financial nature. So there is a basis for recording such transactions in the journal. So what is that basis? That is the source documents. What are source documents? It can be a bill, it can be an invoice. So these are the source documents on the basis of which we record entries in the journal. So you can see this is the format of a journal. Here you can see that we write the date and the particulars. Here we write the ledger folio, the debit amount and the credit amount. So after we prepare the journal, the next thing that we do is we prepare the ledger. So what does ledger look like? Ledger is a type of a T account. So you can see that on both the sides you have equal number of columns there. You have date on this side, debit side also, and the credit side also. So there is one left side, that is the debit side, and one right side, that is the credit side. On both the sides you will see the similar type of columns. So you see date both the sides, then particulars both the sides, then journal folio on both the sides, and then the amount by which it is to be credited or debited. So next, after we prepare the journal, what we do? We prepare the trial balance. So trial balance, when we prepare the trial balance, we write the date, then this is the particulars column where we write the name of the account, then we write the ledger folio, or we write here journal folio. This is the page number of the journal. Then this ledger folio is the page number of the ledger. Then we write, if it has debit balance, we write it in the debit column. If it has credit balance, we write it in the credit column. Then what do we do after we prepare the trial balance? What do we do next? So next is we have to find the profit and loss, because every business would like to know at the end of the year whether it is earning profit or it's incurring losses. Then also we need to know the financial position of the business. So for this, what do? first we prepare the trial balance, and if you see the trial balance, then you see we have already in the initial classes also we have already talked about these 5 heads on the basis of which we do the accounting, or we can say that our accounting rests majorly on the accounting treatment that we do with these 5 heads. So the 5 heads are assets, the liabilities, the capital, expense and the income. Now you can see here that the assets and the expenses both have debit balances, while you can see the liabilities, the capital and the income and revenue, all 3 have credit balances. So we can say that the assets and expenses we treat them in the same way, and the other 3 the treatment is same. So now after we prepare the trial balance, what do? We prepare the income statement, then we also prepare the position statement. So when we prepare the income statement, we take into consideration the expenses and the income, and when we prepare the position statement, we take into account the assets, the liabilities and the capital. So the next thing that you will do after this is preparation of the financial statements, and the financial statements is preparing both income statement and the position statement. So when we prepare both of these statements are known as financial statements. So let's move ahead now and learn that how do we prepare financial statements. So before we begin with preparation of the financial statements, let us also know about what is the meaning of financial statements. Now, as I just told you that it is a combination of income statement and a position statement. So the statements, and why do we prepare financial statements? To know whether the business is earning profits or it's incurring losses, and also to know the financial position of the business. So the statements that are prepared to know the result of the business and the financial position of the business are called financial statements. Now next we need to understand that why do we prepare the financial statement? What are the objectives? क्या उद्देश्य है financial statements को बनाने के? So first thing that is there is to ascertain the result of business activities. To find out what is the result of the business activities, we prepare the financial statements. Then to find the financial position of the business, we prepare financial statements. Then they are also helpful in taking correct decisions for the business. They help the management in taking correct decisions. Then they also help in judging the performance of the management, the decisions, whatever decisions they have made accordingly, whatever the judgments have been made, they are also being evaluated. Then ascertaining the cash position of the business. So it also lets us know about the cash position of the business. So now next is classification of financial statement of a sole trader. So as I already told that whenever we prepare a financial statement, it is a combination of an income statement and a position statement. So first, one by one, we will make it more, try to understand it that what is actually an income statement or what is a position statement. So when we talk about income statement, so why do we prepare an income statement, and then why do we prepare a position statement, and what is the difference between two? We will learn all these things. So income statement is prepared to know the profit and loss of the business, and the position statement is prepared to know the financial position of the business. Let's learn further. So moving to the income statement. So income statement is prepared to find out profit and loss of a business for a particular year. So for any particular year, if we want to find out whether a business had made profit or it is suffering losses, what do? We prepare a income statement. And income statement, it is made up of two accounts, trading account and profit and loss account. Then trading account, why do we prepare a trading account? Now we have said that we will prepare two accounts. First we will prepare the trading account, then profit and loss account. Trading account we prepare first because we find out the gross profit or the gross loss that is suffered by the business. So first when we prepare the trading account, what do we get? We get the gross profit or gross loss, whatever the position may be. Then next we prepare the profit and loss account, and by making profit and loss account we find out net profit that is earned or net loss that is suffered. So when we prepare the income statement, we prepare two accounts. First is the trading account and next we prepare the profit and loss account. So what do we get from the trading account? We get the gross profit or gross loss, and then what do we get? That gross profit we transfer it to the profit and loss account, and finally from there we get the net profit or the net loss. Now let's move further and see how. So first we need to understand what is a direct expense and what is an indirect expense, because all direct expenses are entered in the trading account, and all indirect expenses are entered in the profit and loss account. So what are direct expenses? These are spent on purchase and manufacturing of goods. So whatever we spend on the purchasing of goods and manufacturing of goods, those are direct expenses, while the amount that we spend on selling, advertising and distribution of goods, those are indirect expenses. Then direct expenses, it is recorded in the trading account, and indirect expenses, it is recorded in the profit and loss account. Next, what can be the examples? Wage, carriage inward, factory expenses, these all are direct expenses, and salaries, insurance, office expenses, they all are indirect expenses. Now let's move further. This is an income statement. So income statement, again, it comprises of trading account and profit and loss account. So this is the pro forma of a trading account. So when you see the next page, we will see in the next slide, we will see the pro forma of profit and loss account, but this is trading account. Now look very carefully. Here you will record all those expenses which are of direct nature. So whatever was your opening stock, that you will enter here. Whatever you purchased, the cash purchases, the credit purchases, and then total of cash and credit purchases minus any purchase returns. So whatever you have purchased, out of those purchases you returned some goods. So those purchase returns would be subtracted, and then net purchases would be mentioned here. Then direct expenses. What are direct expenses? The wages that you may have given, the freight that you might have paid, the carriage inward would be recorded here, then fuel and power, factory rent, gross, and then till factory rent. So these all are your trading expenses. Then this side you see that you will mention sales. So sales can also be cash sales or credit sales. Then you mention here total sales and minus the sales returns if any goods are returned. Then you find the net sales and you write the amount in the outer column. Then by closing stock will be given to you in the question. From there you will write the closing stock, and also the opening stock will be mentioned. Then you see here it's written gross loss and here it's written gross profit. Next, you know, because you have now or by now you already know how to prepare a ledger. You have already prepared a ledger. You know how to prepare a ledger. So you will total both the sides. After you total both the sides, you will find out which side is the greater one. So whichever side the balance is left, if you have this balance left, then you are going to write the amount here, the balancing figure whichever is there, and then it will be gross loss. if this side is greater and you have a balancing figure here, so then that will be your gross profit. So it will depend on your question, what you are solving, that you find a gross profit there or you find a gross loss there. So moving to the next, then this is the pro forma of our profit and loss account, and you can see here it's written pro forma of profit and loss account and profit and loss account of Messrs ABC Limited for the year ended, whichever year is there. You are going to write it on the top. Whenever you attempt such a question, you make a profit and loss account, you are going to mention it there. Then the gross loss. Now you remember in the previous you can see here that this gross loss or gross profit. Okay, so this gross loss or gross profit, whatever is there, will be transferred to profit and loss account. So if it is gross profit, you are going to mention it here. If it is gross loss, you are going to mention it this side. Now after you mention the gross profit or the gross loss, then you are going to mention here this side the expenses, and this side you will mention whatever revenues you have earned. So if you have paid the salaries to the office staff, you have paid office rent, you have paid printing and stationery expenses, insurance premium you have paid, freight outwards, carriage outwards, discount allowed, postage, telephone charges, office expenses, sales expenses, these all expenses would be mentioned here. And this side you will be mentioning the revenue that is earned, if you've earned some commission, if you have received some discount, if you have received rent, interest, and then similarly as in the previous slide you saw that you will total both the sides, and wherever you get the balancing figure, if you get a balancing figure here, then that will be your net loss, and if you get a balancing figure here, it will be your net profit. Then where will this net profit go? First thing is that you came to know that you will be what is your net profit and or net loss or gross profit and gross loss. But other than this, what is the other use of finding this net profit or net loss is that it will also be mentioned in the position statement that you will prepare. So till now you were learning about the income statement that comprised of two parts, that is the trading account and the profit and loss account. But after this you will be preparing a position statement. So before we move to the position statement, let us also learn the difference between the trading account and profit and loss account. So trading account, if you see, this account shows gross profit or gross loss. For an accounting year, you have just seen that how it shows, how can you find the gross profit or the gross loss. And in profit and loss account, what do you find is the net profit or the net loss. Then what else you do in the trading account? You have also learned, when you learned the difference between the direct expenses and the indirect expenses, that in the trading account all direct expenses relating to the business are shown in the trading account, and all indirect expenses relating to the business, what were the indirect expenses? The advertising, the distribution expenses, the expenses on selling of goods. So those are indirect expenses, and they are shown on the debit side of profit and loss account. And then trading account, all the direct revenue items are shown on the credit side of it, and all indirect revenue items are shown on the credit side of profit and loss account. Then the balance of this account, trading account, is the gross profit or gross loss. Is what is done to it? It is transferred to the profit and loss account, that is P&L account, and then the balance of P&L account is transferred to the balance sheet, and this profit is known as, or loss is known as, net profit or the net loss. Now what are the steps that we need to keep in mind while preparing a trading account. So first is the debit side of it. So you remember, because you have just seen the previous slides. So the debit side of the trading account, what was there? First of all, what was there if you try to recall? Can anyone of the learners answer what was the first step while we were preparing the trading account? Okay, so without wasting any time, the first thing was the opening stock, which was mentioned there. So on the debit side, first what do we do first? We write the amount of the opening stock, we write the amount of purchases and the direct expenses whatever are incurred. Okay. Then next step is on the credit side. What do we do on the credit side? What was there on the credit side? Sales. Sales return or sales inward is deducted from sales to get the net sales figure. So you remember that there was mentioned cash sales, credit sales, then sales return if any is there would be deducted, and the final net sales amount would be written in the outer column. Okay. So, and also you mentioned the closing stock. Then what is the third step? So first is the entries you do on the debit side, next is the entries you do on the credit side, and then third step is finding out whether it is gross profit or the gross loss. So what do we do for that? You calculate the difference between the two sides. Okay, and then after you calculate the difference, what is done is the bigger side is seen, and accordingly the balancing figure which is there, if it is on the debit side it will be gross profit, and if it is on the credit side it will be gross loss. Then what are the steps while preparing profit and loss account? After you have prepared the trading account, what you get from there? You get the gross profit or the gross loss, which would be transferred to the P&L account. So now how would you begin preparing a P&L account? So first is on the debit side. What would you first mention on the debit side? You mention the gross loss, if there is gross loss. Then all items of revenue, expenses and losses, if any losses are there, that would also be mentioned there. Then on the credit side, what if the gross profit is there, then it would come to the credit side of it, and all items of revenue nature and gains, they will be mentioned on the credit side of it. Then what do? You ascertain the net profit or the net loss, and it is similar as you have done for the previous one. You will total both the sides and find out the balancing figure, and it will decide which side it is, the debit side or the credit side. Accordingly it will be termed as the net profit or the net loss. Then after you have done the preparation of the income statement, then you come next to the position statement. Okay, so what is the position statement? Position statement, it's also mentioned here balance sheet. So balance sheet or position statement is prepared to find out the financial position of a business on a particular date, and generally it is prepared on the last date of the accounting year. It is prepared after preparing the trading account and profit and loss account, because I already also told you that the balance of trading account, that is net loss or net gross loss or gross profit, will move to the P&L account, and the balance there, that is your net profit or net loss, would move to the balance sheet or your position statement. So balance sheet, you will see in the performer later, it has two sides. The left hand side is known as the liabilities side, and the right hand side is known as the asset side. So let's learn more that why do we need to prepare a balance sheet. So first of all, we have been saying till now again and again that it is prepared to find out the true financial position of a business at a particular point of time. Then it is also a systematic presentation of what business owns and what it owes. Business के पास अपना क्या है, क्या business और कितना business को देना है, दूसरे लोगों को देना है या लेना है, that also is revealed by the position statement or the balance sheet. It also shows the financial position of the concern at a glance. So at one look, you will be able to see all the balances, and that's why we prepare a balance sheet. The creditors, the financiers are particularly interested in balance sheet of a concern because it is from here, from where they can get to know the true position, the true financial position of any business concern. So this you can see is a pro forma of a balance sheet. So on the top it's mentioned balance sheet of Messrs so and so, whatever the name of the firm, as on, because in the previous slides you have read that it is prepared on a particular date. So you will mention as on that date. Like if it is 31st, if you are preparing at the end of the year, it would be 31st December 2021, like this. So this side you can see is the liabilities side, and this side you can see it is the asset side. So liabilities side, there is you can see we will write the bank overdraft, the creditors, loan if any, capital, and to the capital we add the net profit. If it is net loss, we subtract it, because when we preparing the income statement, then I told you that your net loss and or your net profit, whatever it is, it would be transferred to the balance sheet. So here is where you will mention your net profit or net loss. If it is profit, it would be added to the capital account. If it is loss, it would be deducted from the capital account, plus net profit minus net loss, and you will also subtract the drawings. Okay, you know what are drawings? That any amount that is withdrawn by the proprietor for his personal use, that is drawing. You will deduct drawings from here. Final amount would be mentioned here. Then this is the asset side. You will write the cash in hand, cash at bank, debtors, stock, investments, furniture, motor vehicles, plant and machinery, and land and building, and if any other asset is there, you would mention that also. So learners, here we would take a quick break here, and I would be right back after the break. Till then, keep watching.
प्रकाशित करने राहों को आलोकित करने, जीवन ये प्रकाशित करने राहों को आलोकित करने, हम अपना दीपक स्वयं बने, हम अपना रास्ता स्वयं चुने, हम अपना दीपक स्वयं बने, हम अपना रास्ता स्वयं चुने, जीवन ये प्रकाशित करने राहों को आलोकित करने। धन साधन समय की सीमा से विद्यालय जो मुक्त हो, धन साधन समय की सीमा से विद्यालय जो मुक्त हो, कभी पढ़े हम कहीं पढ़े वे विषय की लोच से, युक्त हो।
कभी पढ़े हम कहीं पढ़े वह विषय की लोच से युक्त हो।
मित्रों हम उठे और जागे,
मंजिल आने की ध्वनि सुने हम, अपना दीपक स्वयं बने हम, अपना रास्ता स्वयं चुने।
जीवन ये प्रकाशित करने, राहों को आलोकित करने।
राष्ट्रीय मुक्त विद्यालय का है द्वार खुला सबकी खातिर।
शिक्षा परीक्षा का अवसर एक बार ही क्यों मिलता फिर।
शिक्षा परीक्षा का अवसर एक बार ही क्यों मिलता फिर। दुनिया में इसके केंद्र बहुत,
कोई मन चाहा केंद्र चुने हम, अपना दीपक स्वयं बने हम, अपना रास्ता स्वयं चुने। कोई मन चाहा केंद्र चुने
Hello learners, welcome back to NIS Studios. We are having a live interaction in accountancy at the secondary level, and the topic for the day is financial statements. Before we were going for the break, we discussed about the financial statements, the income statement, the two types of income statement, that is the trading account and the profit and loss account. And now we are having a discussion on the position statement, that is a balance sheet. Before this I just showed you the performer of a balance sheet. Now I have certain short questions for you so that you can have a quick recap of whatever you have done. So what you have to write the name of the account. You have to tell me the name of the account, whether it is trading account, profit and loss account, and the side, whether it is the debit side or the credit side to which these items that will be shown on the screen will be posted. Just try to tinkle your mind. I know the answers would be given there right in front, but just try to focus. If you would give the answer, would it be the same answer? So first is the closing stock. Where do you enter the closing stock? So closing stock is in the trading account and on the credit side, right? Next is the carriage outward. Carriage outward is in the profit and loss account and on the debit side. Then the interest on investment, again any income that is received. So if you have done investment, we will receive interest, so that will be in the profit and loss account on the credit side. Then the custom duty we have paid, so that will be trading account and it will be on the debit side of it. So fuel and power, again on the trading account and on the debit side. Then the sales, again sales would be recorded in the trading account and sales we record on the credit side. Next is salaries. Salaries would be is an item of revenue nature, so it will be recorded in profit and loss account and on the debit side of it. So rent from a tenant, it is again on the profit and loss account, and it will be, you will receive the rent because you are receiving it from a tenant, so it will be on the credit side of the profit and loss account. So after this, because some time back also I told you that all the accounting that we do is based on the 5 heads that were mentioned, that is the assets, the liabilities, the capital and expenses and income. So let us know about the grouping of assets and liabilities, which is you must know here. So liabilities, it can be current liabilities or it can be non-current liabilities. Then the assets are also of 5 types: the current assets, the non-current assets, liquid assets, tangible assets and intangible assets. So these all you have already learnt about them in your previous discussions. So I just mentioned these points because so that you can just think upon them. I am not going to go into the details of this slide particularly. So moving further, now next you should be knowing the marshalling of assets and liabilities or the order, because when I showed you the performer also, the performer of the balance sheet, so whether you are mentioning the assets or you are mentioning the liabilities, it has to follow certain order. So it can be either liquidity order or it can be permanency order. So what is liquidity order and what is permanency order? So liquidity means convertibility of assets into cash. Okay, so किसी asset को आप कितनी जल्दी cash में change कर सकते हैं, convert कर सकते हैं, that is liquidity. Assets are written in order of their liquidity. Then assets of highest liquidity is written first. When we follow the liquidity order, then highest, or like what will be the asset of highest liquidity? That will be cash in hand, because that is already you have, and the next order would be cash at bank, because that after you if you don't have cash with you, then the easiest thing you can get cash is from bank as compared to other things which we would also learn about. So the assets of highest liquidity is written first. Similarly, liabilities are also written in this very order. How? Then what is permanency order? Assets which are most liquid, such as cash in hand, are written at the last. So in permanency order, it's just the opposite of what we call the liquidity order. So in that, the cash in hand would come last. Order of liabilities is similarly changed. Then capital, when we write the liabilities side, the capital is written first, then the long-term liabilities, and then lastly we write the short-term liabilities. So this is the order that is followed in the permanency order. Now see, what order is this? Now you have to tell me. So you see here cash in hand is written first, then you see the cash at bank, then the next thing you can liquidate is the prepaid expenses, because that you've already received. Then investments, bills receivables that you have to get, the sundry debtors, closing stock, investments, furniture, and then plant and machinery. Then you have the good land and building, and then lastly you see is the goodwill. Then this side if you see, so you will write first the bank overdraft, then next outstanding expenses, then next you see is the bills payable, then sundry creditors, loans, and lastly will come the capital. Then to the capital you will add net profit, and then you will subtract drawings. So which order is this? This is the liquidity order. So if you are following liquidity order, you will follow it on both the sides. If you are following permanency order, you will follow it on both the sides. So now let's see the next slide. So now in this slide you see that cash in hand has come last. Then what order is this? And the goodwill has come first. So this is the permanency order. Similarly, you will see that in the last slide the capital was here, now it has moved upwards and bank overdraft has come down. So this order is the opposite of the previous one, and it is known as the permanency order. Okay. Then assets, there are fixed assets, then there are wasting assets, there are fictitious assets, current assets, liquid assets, tangible assets and intangible assets. So fixed assets you all know by now. So like furnitures, fixtures, those are fixed assets, wasting assets like mines, and then fictitious assets like goodwill, or current assets that can be easily changed to cash, or liquid assets which are already in liquid form, then tangible assets which you can touch, and intangible assets that you can't touch. Some of the categories may be overlapping, some of the asset may fall in more than one category, so there is nothing to be confused about it. Okay. Next are the liabilities. So liabilities, there can be long-term liabilities, there are some of them are current liabilities, and then some are owners' funds. Now some questions for you. So goodwill, so you have to write the type of asset against the item given below. So goodwill, can any one of you tell what type of asset is goodwill? Would anyone try answering? You can message also. Okay, so goodwill is an intangible asset. Okay, and then next is bills receivable. So if we talk of bills receivable, it is a current asset because it can be easily converted into cash. Then if we talk of preliminary expenses, it's a fictitious asset, and mines, these are wasting assets. And if we talk of furniture, what is it? Fixed asset. So I can see many of you giving right answers. Thank you for the answers. Then next is, if you see the slide on the screen, you will see that what are the type of liabilities against the items given below. What are the types of liabilities? Loan on mortgage, so it's a long-term liability. Okay, so if it is a loan on a mortgage, it's a long-term liability. And then creditors, it is a current liability. Outstanding expenses, it is also a current liability. And capital, it is owner's fund. So I have taken these questions, so just to recapitulate whatever you have done, or to make it more clear to you to understand. Now next is, you have to fill up these blanks. The amount by which credit side of trading account exceeds the debit side is known as, would anyone try answering? You can mention, the chat box is open, you can mention your answers there. Yes, good, I can see people typing. So the amount by which the credit side of the trading account exceeds the debit side, what is it known as? It is known as the gross profit. The next is the amount by which debit side exceeds the credit side of profit and loss account. Now you are thinking about the profit and loss account, and the debit side exceeds the credit side. Would you try answering? So this is the net loss which you find when the debit side exceeds the credit side. If you remember the pro forma well, you will be able to answer all the questions. So whenever a question is asked, just try to remember the pro forma. If you remember the pro forma, you will be able to ask. The total of the two sides of balance sheet should always be equal. We all know that the balance side totals should match. And then the bank loan is shown on the dash side of the balance sheet. You all know that the right side is the credit side, so it will be shown on the left side, that is the liability side. The right side is the asset side of it, and loan will be a liability. So now let's see one question. We will try to solve one question here. So first we need to understand that when we are doing a financial statements, we also make some adjustments. So that adjustments are because we have to make the profit and loss account or the trading account or the balance sheet for that particular year. But it may be possible that in that particular year we have received amount for some other year or we have paid amount for some other year. So that amount needs to be adjusted. That's why we need to do some adjustments to the financial statements. So to know the correct net profit or correct net loss of a business of an accounting year, we make adjustments. To provide for depreciation of fixed assets, we make adjustments. Then to record expenses which have been paid in advance for future years, we make these adjustments. Or to record expenses which have become due but have not been paid. Okay, because suppose you were to pay the salary, so the salary is due but you have not paid, but then it is the amount for which is to be paid in that particular year. So you have to make adjustment for this. Then to know the correct financial position of a business, it is required to make adjustments. Then which you have to study is the closing stock, the outstanding expenses. Then you have to also learn about the prepaid expenses or the depreciation as was mentioned earlier. Then first of all, let us see about the closing stock. The stock of, what is closing stock? The stock of good that remains unsold at the end of the year is known as a closing stock. So end of the year is the end of the accounting year. And first case is if it appears in the trial balance, and in some of the times it is not given in the trial balance, it appears outside the trial balance. So first case, if it appears in the trial balance, so like you can see the closing stock is written here 30,000 rupees. If it is given in the question like this, what will you do then? What you do is you record it as an asset in the balance sheet. And you see the balance sheet here, you can see that the closing stock is mentioned here in the balance sheet and the amount of it is 30,000. Now case 2, if it appears outside the trial balance, now this time it is not given in the trial balance, it's written like this, trial balance, kahin bhi closing stock mentioned nahi hai, below the trial balance it is written the closing stock on so and so date was 1,04,000. So how do you do this? How do you treat this? So journal entry is to be made and your journal entry will be closing stock debit to trading account. Then that means it will come to the trading account, and in the trading account you will write 30,000 and in the balance sheet again it will go as 30,000. So this you have to remember. So same, trading account is the credit side and balance sheet asset side. Then next is the expenses that have become due but it's not paid. The expenses are due but not paid. So those expenses are known as outstanding expenses. So what is the impact of these expenses? Firstly, these expenses, the expenses increase and the liabilities also increases. So the journal entry will be the expenses because they are increasing, and you remember we do the same treatment for assets and expenses. So when both of them increase, we debit them. So the journal entry will be expenses debit to outstanding expenses. For example, we see that the wages outstanding is 5,000 rupees. So now what would be your journal entry? You would debit wages because you just saw the journal entry that you will debit the expense. So wage is the expense, debit wages and credit to wages outstanding with 5,000 rupees. And what would be the impact? To the wages column here, you will add outstanding wages and that is 5,000 rupees. And in the balance sheet, whatever expense is outstanding would be mentioned on the liabilities side because it's a liability, so you will mention in the balance sheet wages outstanding. Next is expenses accrued but not paid. So if it is salaries outstanding 10,000, as I gave you one example, so again the journal entry would be same, the expense debit to the outstanding account. So salaries account debit to salaries outstanding 10,000. Then what would be the impact in the profit and loss account, where you have mentioned salaries on the debit side, you would add salaries outstanding there. And next, what would you do in the balance sheet? As you mentioned wages outstanding, in the similar way you will also mention the salaries outstanding. Now expenses that are paid in advance, what is the impact of these? These expenses decrease, it's the opposite. So till now in the previous one you saw that expenses increase, and so here what is happening, the expense is decreasing, and in the same way asset also, but the asset increases. So the journal entry would be prepaid expense debit to expense account. Now let's see one example quickly. Now out of the total salaries of 2 lakh, salaries amounting to 25,000 relates to next year. But 2 lakh हो गई है, but इसमें से 25,000 जो है that is for the next year. So it is prepaid. Prepaid कितनी है 25,000, and to salaries account you mentioned here 25,000. And what would be the other places that you would be recording? To the salaries column you would be deducting the prepaid salary, and what will come in the balance sheet? Now the outstanding expense you were mentioning on the liability side, same way the prepaid expense would be mentioned on the credit side of it. So this is how you are going to make adjustments to the accounts while you prepare the financial account statements. And in the subsequent lectures we would be learning more about adjustments and do more questions on it. Thank you so much learners for being there. Thank you so much.